Okay, it's that time of month again. It's when Harris comes and join us, Kuppy's Corner. Harris, big welcome. Although I think that there's probably other days that you would rather be talking about something different, right?
Yeah. It's been something of a brutal January.
It's just been volatile. I can't believe it. Harris, I don't know how you've done, but I came in. I think at one point I was up the size and I went down size. It's just been all over the map. What do you make of it?
I don't know. I mean, I've had one of my worst months I think I've had in many, many years. And I don't get it, but it's part of the game, right?
Yeah. Well, let's jump into it and let's talk about some different things. Let's start with stage stores. It actually was one of your things that you recommended. There was it got halved. You got out. Thank God you got out, and you wrote about it and got everyone out. But what's going on there? What do you think? Is it done? Should we take it off the screen?
I think you take it off the screen. If you look at what I do, style-wise, I look for asymmetric opportunities where you risk something small to potentially make something large. And you have to be disciplined that if your thesis isn't panning out, you get the hell out of the way. And stage stores, the thesis was it was converting from a dying department store chain to something better, off-price retail. And they seem to be making a lot of progress in Q2 and Q3. The stock went up a lot. I sold a few, but clearly not enough. And then they announced holiday comps, and it was a disaster. And I met management that day in Orlando, and they couldn't really answer any questions. I don't know if they were being evasive. I don't know if they just literally didn't know the answers, but it wasn't confidence inspiring in any way. And I just told myself, the first update, I'm getting the hell out of this thing. And, I ended up selling mine in the high threes. My cost basis was kind of the low mid threes. I actually made some money on this, which is surprising because I got the thesis totally wrong. But, but that's the whole point of asymmetry. It's that you can be totally wrong and you still should be able to get out for, a small gain, small loss. And, I'm going to have a lot of chops. It's part of the business. When you're looking at asymmetric stuff, you have one or two winners that make up for all your chops and the occasional loser. And in this case, it's wrong.
It's like trading a log gamma strategy. You lose, and then you make, and that pays for all the other ones. So,
but you have to be disciplined. Disciplined. When you're wrong, you get the hell out of the way, especially when you have a bad balance sheet.
Well, then let's talk about one of the things that's not going your way as well is the shipbuilding, the ship tankers.
Yeah, what's going on with Sting, bud?
Oh God. So let's talk big picture on tankers, okay? Big picture is that you have IMO 2020, which is making older vessels obsolete. It's raising tanker prices, and you have a bunch of demand coming from Asia and India, and you have a bunch of supply coming from U.S. Gulf of Mexico, Brazil, Guyana, West Africa. Very, very big picture. The energy has to get to Asia, and you need tankers, and those are much longer routes than Arabian Gulf. And charter prices spiked, Q4. It was great. Q1 is phenomenal because these guys locked in charter prices at the peaks. I mean, Q1 will be the best quarter in 10 years for any tanker company. And then I think you had a lot of shipping tourists, I guess, investment tourists in these companies.
Look, that's a new one. Shipping tourists. I like it. Yeah.
I thought you'd like it, Kevin. But in the end, I think people are looking at this and they're looking and they're saying, VLCC. Let's just talk VLCC because it's the big vessel everyone looks at. It was 120,000 last week of December. Everyone got super excited, plugged into their model and said, wow, these guys make a ton of money. Well, a VLCC today is 50,000. It's dropped off more than half in a month. And everyone's panicking. Oh, my God, it's 50,000. The world's ending. And I think people forget that this time last year was like 30,000. So we're up 20,000 year over year. And that's with, Wuhan zombie flu. And that's with, all the other stuff that's happening right now. I mean, year over year, we're up quite dramatically. And I look at this from a year over year. You can't do it month to month because it's seasonal. And I think you had a lot of guys that got really crowded in some of these names and they totally panicked. And I don't think there's a reason to be panicking right now.
All right, so Kuppy, what I wanted to ask you, to me, I felt with the IMO 2020 that this felt incredibly like what happened with cannabis when it was being legalized in Canada, which is it was the buy rumors, sell news. And so as we were going into this year end when this transition was going, everyone sort of buying it up into that. And then just as everything turned, it became a sell. Like, is there any, what do you think of that idea?
Well, obviously that's what happened. And look, I took a few off near the highs, and I know this is seasonal. I had some call options, and I exited those really nicely. But in the end, I think people got in their head the wrong idea as to what was happening. I think people expected these rates to go to some crazy, crazy number, and that's just not the way shipping works. If rates had gone to a crazy number, no one would be chartering vessels. In the end, rates went to a very, very good number, and they're still at a very good number. And
Patrick, I'll push back on your cannabis analogy. The cannabis stocks weren't making any money. These companies are actually making money, and this is actually a much more fundamental basis. So it's actually a much better proposition. So the $64,000 question, Kuppy, is: are you buying more down here?
Yeah, I have been. I'm a I'm a sucker, but I've been buying. I mean, I took some off the highs, not enough clearly. I've been buying more down here. Look, Euronav reported yesterday, the first tanker company to report. You have a $10 stock. They reported $1.10 in earnings for in cash flow for Q4. It's probably going to be almost $2 in Q1. So you have a $10 stock that has $3 booked for a 6-month period. I mean, let's assume they make no money the rest of the year. This company trades at 3 times earnings, and NAV is something like 13 or 14, and here we are at 10. Euronav has a policy to pay out 80% of earnings in dividends and buybacks. I mean, look, if they pay out a $3 dividend, it's not going to be a 30% dividend yield. It makes no sense. And I think a lot of people think the trade is over because IMO 2020, it happened and there was no fireworks. Like, IMO 2020 is keeping rates very elevated. I think people are just wrong here.
Right. And I'll be honest with you, Kuppy. I joined in the shipping tourist phenomenon here. I've been picking away as well because I think that this Wu-Tang zombie flu, as you talk about it, is greatly over kind of priced in, but at the very least that the market has gotten ahead of itself. And what I find interesting is what they've chosen to go after. They haven't gone and sold the regular stock market. They've gone and sold very specific parts of the stock market. And I think for some reason they chose shipping as one of those things. And I guess it's a fear that if nobody's buying anything and world trade collapses, it's going to affect it. What are the concerns about whether world trade, is a decline in world trade would cause the sensitivity of these shipping stocks to actually their earnings to collapse?
Well, yeah, look, if we're all dead, then no one's trading anything.
Right, but let's not assume that we're all dead. It's not Walking Dead. But let's talk about what if we end up not trading as much with China.
Well, look, I think you're going to see charter rates decline. Meanwhile, Trump, the great negotiator, negotiated with China that they're going to buy a lot of U.S. energy products. I think it's something about force majeure right now because most Chinese are, sitting at home and eating ramen and playing video games as opposed to using energy. But this will fix itself eventually, and I don't know. There'll be a couple month lag, and then China's going to go use a lot of U.S. energy. If rates permanently are at a loss-making level, then yes, it's a problem. But if you look at these companies, I mean, look at this Euronav. They've retained $3 a share on a $10 share price in cash. Like they're going to use that money to delever. They're going to use that money for something else. All these companies have retained somewhere between a quarter and half of their market caps in cash in the last 6 months. So they're dramatically de-risked from a share price perspective. I just don't see that much downside here. Of course, it'll trade wherever it trades in the short term, but longer term, look, China's going to keep growing and they need energy. And the energy is probably going to come more from North America.
Okay, so there's a lot of dislocations happening in the market. It seems to be that the only 5 stocks are going up, Microsoft, Google, Amazon, and Apple, and some Tesla. What is this creating opportunities? Are there other names that are getting cheap enough that you're looking to buy? Like, you're a true value investor. I saw the other day that the value versus growth had its largest one-day move against value in the past 20 years. Are there names that are hitting your radar?
Yeah, of course there are. There's tons of stuff I'm looking at. There's tons of really cheap stuff. Um, I haven't really adjusted my portfolio that much. I'm kind of sitting and waiting, but there's a lot of cheap stuff out there. Just the question is, it's been a lot of cheap stuff for 5 years now. When does it bottom and stop getting cheaper? You could look at, say, coal stocks. I mean, I don't think they've had an update yet this year. These things trade at less than 1 times last year's cash flow. It makes no sense. Your shipping stocks are like 2 times last year's cash flow, or like eventually this will adjust itself, and you got to be long, but it could go a lot lower first. You need some sort of catalyst. You need something to bottom this. Right now, all the money keeps going into ETFs, which are buying the same 5 stocks, and all the money's coming out of the other names.
Right, and then when you combine it with the ESG, like you're, recommending coal, which is the dirtiest of the fossil fuels, kind of like, you're going to have to go and repent your sins for just even suggesting that you be long something like that, Harris. What about energy stocks like crude oil and nat gas stocks? Is there anything that's interesting you there?
I mean, look, they're all interesting. I don't think oil stays here at 51. I don't think nat gas stays here at $1.85. I think you got to buy it when they're all bleeding, not when they're all making money. I just don't know if you got to buy it today or you could buy it in 3 months or 6 months. I just don't really know. Every time I try to buy it, I lose money. So a little gun shy here.
Give us some names that you like here, that over the next 3 months you're going to be looking and picking away at if it gets cheap enough.
All right. So I'm a perpetual bag holder in Sandridge. So let's just talk about that again. Look, at this point, there's a 91 million market cap, okay? Mind you, Carl Icahn, it's a $2.50 stock. He paid 17.
Is he still a shareholder?
He still is. They, for whatever reason, he told his guys to go drill holes. I'm not really sure why, but they did. And they basically put $1 in the ground. They'll probably get 60 to 70 cents out. It's value destructive, which is odd for Icahn. He likes making money. But in the end, you have this 91 million market cap company. I think they'll do 100 million in cash flow over the next 12 months. Even at today's commodity prices, maybe it's 75 million they do. They, as I said, they've been putting a ton of money into the ground drilling holes, but they just fired the guy who's drilling the holes. If you read the press release and kind of read through the lines, it sort of sounds like they're going to fire the whole development team and stop drilling holes and basically put this thing into runoff. They're going to take in, like I said, let's call it 75 million at today's energy prices. They have 62 million of debt. They got to pay that off. And then they're probably going to do something accretive, like buy back stock or take it private. I don't really know what they're going to do, but the price is wrong. And meanwhile, you have all the upside leverage to energy prices if they ever do recover. Plus, they own their corporate headquarters, which is probably worth somewhere in the 50 to 100 million range. It just seems priced wrong at 92 million.
The corporate headquarters is probably the most attractive part of that asset.
Well, it covers the whole debt. So, you're basically buying 75 million of cash flow for 92.
Right. I get it. I'm just laughing because it's just nobody's gonna want the energy asset. They're all gonna want the real estate.
Yeah. No, who wants 600,000 square feet in Oklahoma either?
Well, Warren might. You never know.
But in any case, look, there's a lot of these that are really cheap. I have a shopping list. I haven't really plunged on anything yet. Just been kind of sitting around and waiting. I guess.
What about on the short side? At one point you had given up on the short side, saying that
I've given up.
Does it make? Oh, you're still giving up. And
No.
what about the SPACs? We talked about SPACs and the fact that a lot of them don't seem to work on the other side when they finally get converted into companies. Have you done any more kind of analysis there in terms of?
Yeah, the vast majority of them collapse, and they're probably a great place to go looking for shorts. These are companies that couldn't IPO. If you look at what happened with the Ponzi sector, okay, they've had a bunch of IPOs fail ever since WeWork. And so these guys can't get public, but the insiders want to cash out. So what they're doing is they're cashing out into SPACs. So you have these companies that are going public in like a 200-300 million SPAC, but there's like a multi-billion market cap value. And then as soon as the trade window is done, they just start dumping stock. I think it just sets up perfectly to make a fortune. But then, you have things like Virgin Galactic, which goes up every day anyway. So who knows?
That's right. You're missing out. You weren't a believer in the Tesla, and you're not a believer in space travel either.
But they're not even doing space travel. At least Tesla creates cars. These guys are just They're not doing anything. It's just a stock promote. They have not put anyone in space yet.
You haven't embraced it. You haven't understood the true potential.
Yes, the Ponzi sector is so amazing. It's phenomenal.
It's actually a great stock in terms of the volatility and the madness of it. And I'll tell you one thing: I think some of the Teslonians have moved on to the space. It seems to be that it's the new. Honestly, I've seen guys that have been like, "Oh, okay, that thing's already run. Now we're going to go run this one up." It feels like a.
None of this makes sense. Like these guys are chasing these stories like this Luckin coffee. Like I met these guys at ICR. Their big business plan was to have coffee dispensers where you put some coins in and out comes coffee. Like this is stuff from the 1960s in America, and I don't think it's even revolutionary in China. Like, and they don't even make money doing it. I just don't understand how this stock went from like 20 to 50.
Well, did you see the news today that Muddy Waters did a short report on it? He's talking about it being an outright fraud.
I haven't read it yet. I wouldn't surprise me if it was outright fraud. We met with management. They couldn't answer basic questions like, what's your return on capital of this dispenser machine? it just, like, literally, their corporate presentation made no sense. Like, it just literally made no sense.
We'd hit that point in the market when we'd all you needed was to kind of have a dream, and those people would be the ones that saw their stocks explode higher. And it's kind of crazy. Like you've railed against the Pelotons and all this stuff. Here's a question for you: do we think that this is the start of this froth coming out of the market?
I don't know. I mean, look, it's one down day. Meanwhile, Tesla's
more than
still
one
up.
down day. Yeah, well, Tesla is now quality, so people are running to quality on a down day. But it's more than one down day. We're a couple weeks into kind of potentially what could be the top. The ironic thing is, I just tweeted it out today, Harrison. It's something. Do you remember Ray Dalio's partner saying something about the boom bust cycle is over?
Yeah. They changed their mind in 2 weeks.
He top ticked it literally to the hour. I went and looked it up because I remember I wrote a piece and then I looked it up. He ticked it to the hour. And the last time they were in Davos, Ray Dalio said something about cash is trash. He top ticked it almost to the hour then too. It's actually kind of amazing. And who would have thought? With because it was looking so great, but I guess it's the flu. This flu. What do you think? Do you think that I'm overreacting by dismissing, or sorry, not overreacting, underreacting by dismissing the potential fallout for the flu? Like your gut reaction. Where are we in terms of this flu a month from now?
I got a feeling it's escaped China, and we're all going to end up getting it. I don't really know how bad it is for you because being China, no one actually believes the mortality data. I really don't know. Look, I sent my wife to the grocery store. We have a 6-month supply of canned tuna. We we bought some of those N95 masks. That's why Amazon's up $200 today. And look, I think we might just camp out here in South Beach in my condo, duct tape the door shut, and watch Netflix for the next 6 months. Like, I don't really know. Like, I could see this totally freezing global growth.
You're going to be sick of tuna in 6 months, I'll tell you that much.
Yeah, I'd be sick after about 2 days. But you can also go the other direction, and, you get a mild cold, and life goes on. And somewhere between those goalposts is what's really going to happen. But, yes, I really do think that it's kind of frozen in China right now, the economy. And, you have a lot of these companies that are priced for perfection, and they're totally going to miss. They're going to miss badly their Q1 numbers. And I don't really know if it's priced in, or maybe the market is smart and it's looking past it and saying it doesn't really matter. So,
well, I think it's a that's what's going to increasingly happen. The other thing to think about, kind of second order effect, is if it's really that bad in China, the amount of stimulus that they're going to throw at it is going to be unprecedented.
Oh, unprecedented. I mean, that's why I'm so bullish long tankers. I mean, think of it today, okay? You're a shipping executive. You can't go to your board of directors and say, we need to order some new tankers because you don't know what it looks like for another 3 or 4 months. So there's going to be a gap in ordering. So you're going to keep your order books thin. Your fleets are getting older. Your charter rates are down. You're going to have more scrapping. And meanwhile, China's going to have the mother of all stimulus programs. So Why don't you want to be buying? Like maybe it's 1 week from now or 2 weeks from now, but you got to be long this thing.
Okay, well, we'll leave it there. On that note, Harris, thank you very much for joining us. It's always a pleasure, and we look forward to chatting a month from now, and hopefully things will be better.
Sounds good. Looking forward to it, guys.
Yeah, thanks, Harris. Cheers, bud.
Cheers.